Hello, and good morning, guys. Happy new month. It's the beginning of a new month. Today is 1st July 2026, and I hope this month will be good to us too. June was good to us. Uh, Hope July comes in with some good vibe. Okay, so this is what we were looking at yesterday. Yesterday was the last day of the month, 30th June, and we were looking for potential buys above this level. My confirmation or signal, if you'd rather use that word, was this candle closing above our level with some good bullish momentum. You can see the size of the candle, the size of the wicks, very small wicks, and a very long body closing above, well above our level here. So that was my signal. Once I saw this, immediately I set my buy limit here. Entry at this level here, entry at 40.22, and stop loss just below this candle. The stop loss, ideally I put my stop loss at a level that would invalidate my idea. Let me explain. So in this instance here, uh, there's no way I was going to put the stop loss all the way down here, because this is the structure that was broken as the market was breaking above our level. There's no way I could have placed my stop loss all the way here. It wouldn't make sense. The stop loss would be bigger than the target, my target here. Okay, so the risk to reward ratio would be very off. Okay, so if I can't put my stop loss below the structure, I normally place it below the candle that breaks above, uh, breaks and closes above our level, and this is the candle. So my stop loss was just a few pips below the where the candle opened, the low of the candle. Below the low of the candle, we almost got hit here, and we were activated here. Is where we were activated by this candle here. We were activated, the price kept pushing down, then you had a small impulse up, then another pullback, almost hitting our stop loss here, then the impulse here, where we hit our TP1 and hit our TP2. The trade never went to full profit. Full profit was here at TP4. But all in all, we give thanks for what we got. We got TP1 and TP2. These are how many pips. Let's see how many pips that was. Up to TP2, that was 300 pips. 300 pips is good. And the stop loss was, how many pips was the stop loss? Stop loss was 155 pips. 150 pips for 300 pips. That's a risk to reward of 1:2, which makes sense to me. Okay, so this when your signal to get out was this rejection here. You can see how big the wick is. Let me jump down to 15 minutes so you can see it well. This rejection here was your signal to get out. So this is where you should have gotten out of the market. Okay, this rejection here. For a continuation, I would like to see this kind of closing way above this level here, above the level here. But now this rejection, this is how I got out at TP2. Not what I was targeting, but still got out with some profit. Okay. How you set? You could set alerts on these TPs. If you intend to take it to full TP, set your alerts here. Once your alert goes off, check what's going on the trade. How's the trade going? Okay. So that's what we had for yesterday. We never got the sales. The potential sales were below this level. No candle came close to closing below that level. And so the sales were never activated. But for the buys, we got the buys and took the market up and made some profit. At the end of the day, what we are looking for is profits. We don't want to be right, just make some profit, okay? So, real quick, let's get dig into the fundamentals today. Today is Wednesday, 1st July. Wednesday, 1st July. What do we have on the fundamentals? Do you have any red folder news? Nothing, nothing. Some low impact news on the euro, that is called CPI, and the CPI flash estimates. On the Canadian dollar, it's a bank holiday today, and we have some red folder news on the GBP. BOE Governor Bailey speaks, and on the USD, Fed Chairman Wash speaks at 4 p.m. That is at 4 p.m. Also, worth noting is that at 5 p.m. we have some red folder news, the ISM manufacturing PMI, that will be coming out at 5 p.m. today. So today at 4 p.m. and 5 p.m. expect some volatility in the market. Stay out of the market if you can't trade the fundamentals, or move your stop losses to break even or into profit if you're in a trade. I'll just stay out. If you don't understand the fundamentals, just stay out of the market for at least 15 minutes before and 15 minutes after the red folder news. Okay, so real quick today, you have seen what to expect. Don't know if there are any breaking news that are worth noting. Iran will not enter further negotiations until conditions in the MOU are met. This thing with Iran and the US, tell me, do you see it coming to an end anytime soon? Because as it is now, the back and forth, I don't see any closure anytime soon. So that's just my opinion. But that's what we had on the market yesterday. And now we dive into what to expect today. We have to do a fresh new analysis every day because the market is dynamic. The market is not static. What you had analyzed yesterday is not the same thing that you should be expecting today. Well, you could land at the same levels, but the market has changed since yesterday. So you also need to adjust your levels and do a fresh new analysis. That's why we do this every morning. So that's our resistance there. Our support, the month has already closed. So now our support now we can comfortably pick that as our support. That's the lowest it has gone. That is our support today. And then that's a confirmed the previous month, most recent. We look for the most recent price action. On the weekly, this is where we are. We had this resistance here. The support is still down there. The resistance is up here. On the daily, that's the internal structure, but we have the swing structure here. This level here is a swing structure here, but we have this mini internal structure here. So jump down to the daily, and now on the daily, this is what you are looking at on the daily. On the daily, we had this break of structure here yesterday, the day before yesterday. Here, we had that break of structure there. So the high is there, the low is here, and that on the 4 hours. On 4 hours, we're looking at the low being here, and our 4 hour support is up here. That's our 4 hour support, our 4 hour resistance, our 4 hour support. So when we get here, I like to use the bodies, so the bodies close. So when we get here, adjust that to the body there. Then just a minute here. So adjust that to there. Wait. Okay, we're on 4 hours, and that's our 4 hour resistance. This is our 4 hour support down here. So what we do when you get here, adjust this candle to the body there, and then this one adjust it to where the body is, right there. So these are 4 hours resistance, these are 4 hours support. Okay, we jump down to 1 hour. On 1 hour, you can see this has been a consolidation phase. All this is consolidation. So on 1 hour, we had this now on 1 hour is where you can readjust this. Allow me to move this one. Wait just a minute. Now on 1 hour, we still haven't broken below. So just adjust this to the body there. Okay, we still haven't broken below because this was our last break of structure here. If we go back, this was our last BOS here. After this BOS here, the market high was here and the market low was here. Okay, so this high, no candle was closed above this high. You can see that no candle was closed above this the level here, and no candle was closed below this low here. Okay, so we're still within this, it's a consolidation here. And for that case, well, I'll be looking to trade from these levels here. For the safe buys, is what I'll be looking to get my buys from. Safe buys from there, and the safe sells from here. Okay, out of the consolidation. Don't trade within the consolidation if you don't want to lose your capital, don't want to lose your mind trying to catch moves that go against you. Immediately you place a trade. Don't trade the consolidating market. Okay, so this would be a not trade. Oh, we've not checked 30 minutes. So let's see what we have on 30 minutes. Just a quick check on 30 minutes. On 30 minutes, we had on 30 minutes you had that POS there. Then we had a shift here. The shift was here. Then a little pullback here, and the market came all the way here. So on 30 minutes, what you are looking at is this resistance here. Is a resistance there, and a support down here. Remember, this is a very risky area to be trading. This is a very risky area to be trading. So for the sales, if I get a candle closing below that level there, for the sales, you could pick a sell from here. You could pick a sell from here, and you could pick a buy from this level here. Let's see. Let's look at it on the 15 minutes time frame. Yes, you could pick a buy. You could pick a sell from here. You could pick a buy from here or pick a sell from here. Okay, if you get a buy from here, push it to that level there. If you get a sell from here, push it down to this level here. That's what I'd be looking at. But these are risky entries. They're within the consolidation zone. So for the safe entries, I'll be picking a sell from here to push the market down to these levels down here. So to push the market down to levels below here, or a buy, a safe buy here to push the market up. Okay, so safe buys, above here, safe sells below here. In here, if you can take a quick trade in and out, well, good for you. Yeah, So that's what I'll be looking at. Happy hunting, guys. See you tomorrow for a recap of the same. I'm out. Ciao.